Hey, in this video, I'm breaking down my full investing strategy for the rest of 2025. I'll walk you through the 7 stocks I still believe are worth buying right now. We'll also talk about Palantir. Should you keep holding it after that massive run? And what about Tesla? Has it lost its spark, or is there more upside ahead? There's a lot to get into. So just sit tight, don't rush to buy anything, and don't hit any buttons just yet. Just listen. Let's be real, unless you've been hiding under a rock, your portfolio's probably up. The S&P 500's been hitting all-time highs. The Nasdaq too. My personal portfolio is up 32% year-to-date, even with Tesla dragging things down about 15%. That's all thanks to smart allocation. Here's the wild part, even with Tesla down, I'm still way up, and that's mostly because of Palantir. I've held it since 2020, and it's been a huge winner. But it's not just me. Everyone's making money right now. You could throw a dart at the market and probably land on a stock that's up. But this is exactly the kind of market where people start making bad decisions. They get comfortable. They get cocky. Everyone thinks they're the next Warren Buffett. But I always tell people, when things are calm, that's the time to plan for when they're not. You don't build your strategy in the middle of a storm, you build it before the storm even hits. If you didn't panic sell back in April, you're probably up right now. Doesn't matter if you're holding index funds, tech, value stocks, whatever, everything's been climbing. The only folks who lost money? The ones who listen to the fear-mongering headlines. And I've been saying this for years, the mainstream news is not your friend. The more you follow the fear, the more likely you are to make terrible investing decisions. Let's talk about what we've learned from the last 6 months. Palantir dropped 50%, then hit new highs a few weeks later. The market pulled back hard in April, and then fully recovered. What does that tell you? It tells you that panic, FOMO, and trying to time the market will wreck your portfolio. Period. So, what's the game plan in a market like this? Simple. Prepare now, while things are good. You don't want to be scrambling when the next downturn hits. Now, let me show you my 7-tier investing strategy for the rest of 2025. This is how I plan to stay focused while everyone else chases hype or panics. Tier 1, Foundation. 1. Block out the noise, don't let billionaires, talking heads, or media headlines dictate your moves. 2. Don't be scared of a high market. Valuations may be stretched, but that doesn't mean a crash is around the corner. 3. Stick to fundamentals. Great businesses win over time, no matter the headlines. Tier 2, Core Principles. 1. Save more. That means either spending less or making more. 2. Pick better companies, don't just chase the hype. 2. Find real businesses with staying power. Stay invested longer. Time in the market beats timing the market. Always. Tier 3, Mental Game. 1. Get good sleep. You make better decisions when you're rested. 2. Level up every quarter. Read more, learn new tools, study industries. 3. Avoid debt in investing. No margin, no leverage. 4. Keep cash on hand. Have at least 3 to 6 months of expenses saved. Tier 4, Managing Risk. 1. Trim winners when they go parabolic. If a stock shoots up, take some profits and reduce risk. 2. Use dollar cost averaging, don't go all in or all out. 2. Scale in and scale out gradually. 3. Balance your portfolio, keep your core, like the S&P 500, in check. 3. Don't let high flyers dominate. Tier 5, Portfolio Structure. 1. At least 40% in the S&P 500, it's consistent. 1. Around 10% average annual returns. 1. Number 20-year period has ever gone negative. 2. Hold 10 individual stocks max, anymore, and you're just building your own ETF. 2. Personally, I like 5 to 6 high conviction picks. 3. Don't skip bonds, boring? 3. Sure. 3. But when stocks fall, bonds cushion the blow. Tier 6, when to sell. You need a clear plan for when to exit. 1. When your investment thesis breaks. 2. When you need the cash for life stuff. 3. When it's time to rebalance your portfolio. If you averaged in, average out. Don't get greedy. Stick to the system. Tier 7, the 7 traits of a great company. Before I buy any stock, I want to see 1. More cash than debt. 2. Revenue growth over 10%. 3. Profit margins of 15% or more. 4. Revenue growing faster than expenses. 5. Strong competitive moat, like tech, contracts, or brand power. 6. Exceptional leadership. 7. A business that can thrive in a recession. If it doesn't check those boxes, it's probably not worth the risk. Bonus, lazy portfolio that still beats most investors. If you don't want to pick individual stocks, here's a simple setup that can outperform most retail investors. 1. S&P 500 ETF. 2. Nasdaq ETF. 3. Total US Bond ETF. Here's how I'd break it down by age. No stock research. Less stress. Solid long-term results. My top 7 stocks for the next 5 to 10 years. These are my highest conviction picks. Long-term plays. I'm talking monopolies or near monopolies in explosive industries. 1. Palantir, they're becoming the AI operating system. 2. Tesla, if they pull off self-driving and robotics, it's a game changer. 3. Nvidia, they're the backbone of AI computing. 4. Microsoft, huge in cloud, and partnered with OpenAI. 5. CrowdStrike, cybersecurity leader. 5. Digital infrastructure is only growing. 6. TSMC, makes the chips that power everything. 7. ASML, builds the machines that TSMC uses. 7. Straight monopoly. Final thoughts. Don't obsess over short-term price swings. Don't let fear or hype dictate your moves. Stick to the fundamentals. Think long-term. That's how you win.